Welcome to IPTF's Industry Conversations, the very first industry conversation that we'll be having. And today we're talking about a topic very close to my heart, misrepresentation. I'm joined by an esteemed panel of industry experts from the reinsurance, insurance and advisor sector. And we'll be discussing a number of different areas of misrepresentation. But firstly, let me summarize what misrepresentation is within the context that we're going to be talking about it. Misrepresentation is where a customer, an applicant to a policy, or their advisor doesn't disclose accurate, complete, or honest information to the questions posed on the application. And it's normally around their medical history or their lifestyle, things like smoking, alcohol, non-prescription drug use. But it can also be things like their age. It can be their occupation, and it could be how much they earn. And the last two particularly pertinent to income protection applications. So let's go straight into it. Why is misrepresentation increasing? And indeed, is it increasing? And I'll just add a few of my own thoughts before I open it up to the panel. So firstly, I think we're in a world where we have digital distribution, more straight-through processing than before, simplified journeys. I think that there's probably quite a lot of pressure on advisors to get business on the books, and so it's perhaps more quantity than quality focused. I don't know whether that's fair code, and I do wonder whether claims teams are adhering to that strictly, and whether perhaps over the years there's been a bit of creep in terms of what they can investigate. So I'm going to open up to start with to the panel. Would anyone like to give me their thoughts, share their thoughts with everyone?
Well, I think from my side, I think there's been a number of changes in the industry. I think the advent of post-user sampling has actually added to the fact that you are picking up things which maybe the client's actually forgotten about. I think if you look at, when you speak to advisors as a provider, will actually say that, often say to me, they're trying to get a client on risk. Now, I think that maybe is a wrong way of looking at it. I mean, at the end of the day, an advisor is there to make sure a claim gets paid. And I think there's sort of that anomaly around how do you get a case on risk as fast as you can by asking the right questions, but actually not maybe delving down deeply into those questions, as opposed to making sure that when the client actually gets under cover, you've got the best chance of actually being paid out. And I think if you just change that mindset slightly, which I certainly think has changed over the last couple of years in the sense of how fast, and not just from an advice perspective, STP rates are so important these days. Every company's measuring themselves on STP rates. From an underwriting perspective, how do you keep on having the reflective questions to ensure you getting a premium out there as fast as possible? So I think the nature of the industry actually has changed. As we were saying earlier, I think it's also around the more telephonic sales these days, more online journeys taking place. One sale processes, where you go in, you actually offer the life insurance case, go through the underwriting questions, and in one call, you're actually on sale. All of those kind of things actually lead towards the fact that do clients truly understand the consequences of actually not being fully open around that? And if they don't actually know the answer, rather than actually waiting, finding out and coming back the next day with the answer, they just try and remember the answer, okay, or say it didn't actually happen. And I think there is a fundamental misunderstanding of the consequences of actually not doing it, which maybe weren't around a few years back.
Thank you, Justin. On that as well, I think we've built a process which relies upon customers checking their answers. And we know that there's huge customer apathy towards doing that. Now, that doesn't excuse it, but knowing that there's that apathy out there, I also think as an industry, as insurers, I think we need to look at that process and see how we can get customers to engage better in checking their answers, because at the point of claim, that has a massive impact when there is misrepresentation in terms of categorizing it and dealing with it. And it's something that, I'm sure those of us in claims have seen countless times where quite a careless mistake has been made, but the answers weren't checked and it leads to a claim not being paid or only paid in part. What about the advisors amongst you? What, is there any things that you do to try and get customers to engage better with the application questions and to disclose accurately?
For me, I think I've always positioned an application will take 30 to 40 minutes to go through an application. It's not a quick process, and we go through every question individually. But certainly more recently, I've had an increase of clients disclosing things, but saying, and trying to justify an answer. And I'm just, you have to have the confidence to say, look, I need to know it. Don't worry, because this isn't going to necessarily affect your final underwriting decision, but we need to have it noted on the application. It needs to be transparent. And I think with newer advisors possibly coming to the market, not having that confidence possibly to challenge a client with a disclosure. But off the back of every application, I think it's really important that you give the client the opportunity to read through the disclosures, because in that moment, some things do get missed. You might think of something or not think of something. So giving them the opportunity to review all the disclosures in their own time before confirming that they're accurate, to a point where you can put them on risk. So historically, I know some providers used to make it mandatory that they had to get the application reviewed and agreed before you could start the policy. We always send a copy of the application off the back of the call for them to review it and ask them to check the disclosures and notify us if there's anything that they need to change now, reiterating that it's far easier to change an application than it is to try and argue a difference in the event for claim. And I just wonder whether the fact that it's a one conversation, job done, they've moved on, is, rather than going back to check the answers, is increasing the misrepresentation.
Thank you, Charlotte. And I love the fact you get the customers to actually email and confirm that they've checked the answers. And I think that's what's missing from the process. And I'm not suggesting that that's built in, but you've built that in yourself.
Yeah.
And I think that's really important. Cameron, any thoughts from when you're selling protection about how you kind of get customers to engage?
So my process when it comes to actually completing the applications, I'd make a point to talk about misrepresentation and the potential impacts that could have on a claim. Because I think if you can talk through what could happen if they're not answering honestly, correctly, or doing their own due diligence, and actually it increases the gravity of the conversation and the importance about the information that they're actually giving you. I think the other thing as well, the clients that we work with, I at least look after investments and pensions as well. So I'm seeing these clients on an annual basis.
Yeah.
The importance of doing it right is ever so important in those situations, because I'm going to see these clients potentially for the rest of their lives and their children. So if there's ever a claim and that insurance doesn't pay out, I'm going to be there. They're going to be speaking to me, asking me why that's happening. So that interaction and that relationship is why it's so important to make sure that it is done right. And I wonder if where there are just sort of those single touch point sales of protection, whether that's where the problem lies. If there's sort of, you don't want to challenge the client to tell them how important full disclosure is in case you might lose a sale or something like that in that situation.
And that's a really good point you make, because where you're looking after those clients and seeing them on an annual basis, presumably if they make a claim, they're going to come to you first.
Absolutely.
And you will need to be there for them and walk them through that process. So you don't want, aside from any other reason, you don't want, that kind of possible misrepresentation being exposed at the point of claim.
Absolutely.
And showing that the actual process of getting them on risk failed effectively. So yeah, that's great. Dan, in terms of so looking at again from a distribution point of view, at LifeSearch, how do you guys go about trying to encourage better disclosure?
Like Charlotte mentioned, it's helping the consumer or the customer out as best you can. We're very big on leaving good, detailed, clear notes to come back to. So if you are at application stage, you can come back to and say, look, you have missed that out, just so you're clear. We don't want to make sure that's not on the application. And I think we're very, very big on double and triple checking at the fact find stage. I'll always ask them to go back and ask the customer, is there anything else we need to be aware of before we go into the research? So just trying to get as detailed note as you possibly can, so that when you're at the application, you've got the bravery and the guidance for that customer to say, look, that needs to go down, just so you're clear. So yeah, we're pretty big on that.
Thank you.
I think also clients are worried about not getting insurance in some cases, so that they don't disclose the more minor things because they think it's going to impact on an outcome, whether that's because they've had a negative experience before which has resulted in adverse terms or a decline, and they think that actually by not disclosing it is going to result in better terms, or they see it as insignificant. I guess the biggest one is smoking and social smokers and vapors. You know, when you ask the question, have you used nicotine in the last 5 years, or however you want to frame it, they go, no. And I go, you know, it's picking up on the small things. And then they go, they're nervous because they think, well, that's going to affect my insurance policy, it's going to affect my premium, it's going to affect all sorts of things for those kind of social smokers, occasional smokers, vapors, rather than the full-time smokers. So I think the shift in underwriting has, especially around the smoking side, has muddied the waters a little bit when it comes to do you smoke or not. And especially with the introduction of vaping, a lot of clients don't believe that vaping is smoking. So when you ask the smoking question, they say no, and then you find out that they vape, that's a non-disclosure.
Is there enough about education of advisors coming on board? And I think we train advisors a lot on the product, okay, train advisors on sort of how those things work. But how many advisors get trained on how to actually ask underwriting questions? You know, how you can actually go and delve and actually ask these questions. And I think, you know, when I look at it, I think there's a discomfort sometimes, both from a client's perspective and an advisor's perspective, to actually ask those difficult questions. And maybe there's certain things that the client's embarrassed about, and telling somebody they don't really know about these embarrassing things that have actually taken place with them, okay, just means they just don't mention it. And I we do a lot of work with our business consultants actually around how do we actually go and educate advisors around how to actually ask these questions and do more around that. Because, you know, if you think of a new advisor coming on board today, you know, you go through, I don't know what happened, but you might go through 2 weeks of training or 3 weeks of training. Okay, none of that's around how do you actually ask underwriting questions. You know, just here's the questions and you just read them out. And you don't actually go and delve down. And if the client doesn't quite understand that question, you know, that advisor probably can't explain exactly what they mean by those things, especially when it comes to medical terminology and medical questions and that kind of thing. So a lot of it's actually, I think a lot of the blame is actually around how do we actually educate people, how do we actually train advisors to get the message across in the right way, that it's actually important, but also to train them in a very empathetic way, how to actually ask and delve down into those questions.
But then how would that translate into a D2C market where clients are doing it themselves? There needs to be a further education to the end user as well. If there's no advisor influence, then perhaps the question is, I don't know a D2C journey, but are there enough prompts to encourage truthful disclosure?
So we've looked at that very closely as well, and I think you are 100% correct in the sense of there are prompts around this, the simplified question set, but I'm not sure it gets across to the client the importance, okay, of actually making sure they actually go and do their own research to make sure they're giving you the exact right information. And I think that's probably why you're seeing post-issue sampling, okay, getting so many of these different results coming through, because things that the client didn't actually remember, didn't actually think was relevant and so on, all comes through in this post-issue sampling. And next second you start looking at what the client said and what this comes through as, and those two things, you know, don't always match.
I think it's important for us to share that information with distribution as well.
Yeah.
So any trends that we see with misrep that we pick up early and post-issue sampling are shared with distribution so they know what to look out for. It could be particular questions, it could be particular conditions. So there's an importance there to share that so that we can learn from the misrep that we're picking up.
Thank you. There's a whole load of good points there. So I'm going to revisit them all backwards, I think. Let's start with post-issue sampling. I was going to come to you, Paul, on that. Now, I know that some advisors see post-issue sampling as not a good thing. It causes a bit of disruption, but ultimately it ensures accuracy and ensures that if there is a claim, it should get paid. So can you tell us a little bit more about post-issue sampling? And it is a good thing, right?
Yeah, absolutely. I mean, it's picking up that misrep at an early stage, in your business stage. We want to avoid the ultimate nightmare of not paying a claim. So if there is misrep, to pick it up early is very important. It also gives us great insights into the kind of customers that we have, trends on misrep, the different categories of misrep, whether it's the major ones where you're withdrawing terms, whether it's minor sort of discrepancies on the application. And it gives us an insight into the kind of books that we have. And as I mentioned before, it's very important that we share this with the stakeholders within the business, distribution, so they are aware, if there is going to be any misrep, then potentially it might be this question. And we also gain insights ourselves as insurers as to potential updates we can make to an application, to wording, to certain questions. So it's an important part of the process, absolutely.
Thank you, Paul. We were talking about the advice journey and about educating advisors and increasing their experience and their ability to ask difficult questions and tease out the answers that provide accuracy and complete answers. And I'm going to fly the flag for claims a little bit here, being a claims professional. My experience in the industry is that insurers don't use their claims teams enough. They see it as a frontline claims team who bash through the claims and hopefully get them paid. But there's a loss of knowledge, and obviously the people dealing with claims, having the calls, looking at the cases, understanding where misrepresentation occurs, how it occurs, why it's occurred, that needs to be fed back. And look, we can feed back data, and data is obviously crucially important, but the actual experience of why misrepresentation occurs, how an advisor, for example, could have perhaps asked, teased out the complete, it's so important. And I mean, I would certainly encourage insurers to think about how they use their claims teams and the impact that claims teams can have right across the value chain in terms of getting things right from the beginning. So that's one point I'd like to make. The D2C journey is a really interesting one. I think, Charlotte, you mentioned that, and I think you're right. For customers going down that route, we need to make it so clear about how important the questions are and the relevance, and we need to make sure that they check their answers. And it comes back to that earlier point about this customer apathy to checking answers, and how we as an industry accept that, stop putting the responsibility completely in the customer's hands, and say, look, we need to accept that it's not quite working, and we need to do more. We need to do more.
Well, I think what you're going to find in those kind of journeys, though, I mean, if you're thinking 2-3 years down the line, you are going to find that those journeys are going to be far more conversational and less around the fixed journeys you've got today, right? And in the sense, if you see how we, I know sort of in the general insurance these days, and I think I think I saw a note about Spain, that you can now use actually ChatGPT to actually do an online insurance journey, right? So through conversational questions to actually get under risk. And I think what you'll start seeing over the next couple of years is how we change that and actually use AI to actually start generating a different way of actually asking these questions. And I think a lot of what you see in a D2C journey today is it's built on an advisor journey and just made in more conversational language or easy language for a client to understand, but there's no advisor there. And what you'll see through the advent of AI is far more conversational type journeys. And I think once you've got a conversational type journey going with a client, then it becomes much easier to actually weed out the actual information from that client. So I think it's a problem, let's say today within the industry. I fully appreciate that. But if I look 2-3 years down the line, okay, I start thinking that may not be as big of an issue as you see more of these conversational journeys and conversational work taking place in underwriting journeys for clients.
Oh, that's a great point, Justin, and I can't believe no one's mentioned AI up until now. But you're absolutely right, and it'll be interesting to see how that journey changes. We could carry on talking about this first point for ages, I think, but we need to crack on. I'm going to talk about the impact of misrepresentation, and of course, misrepresentation impacts everyone. There's no winners at all, and so I want to ask a question to Justin, Paul, and Tom. What does misrepresentation mean operationally and financially for providers and insurers?
So from my point of view, I think we should stress that no insurer or reinsurer want to decline a claim. From that very point of sale through to the claim stage, the outcome is never, the wish for the outcome is never to decline a claim. So, pride is very much placed on acceptance rates of claims. So where declining a claim or rescinding a policy in terms of misrepresentation or any retrospective action for that matter, where it can be avoided, we will try and give the benefit of the doubt and understand why that misrep has taken place. I was a claims assessor for about 20 years, and there's nothing more frustrating than investing into a claim, both your time, your effort. Emotionally, you're invested in certain people's conditions. There's very emotive conditions out there preventing people from working. To fund rehabilitation and any support that they need, and then coming to the end and getting that last bit of information to realise that actually there has been significant misrepresentation and there will need to be a response to that. It's really not a good feeling, and it's not a great look on the insurer as well when we're actually applying the terms and conditions of the policy. If you look at it black and white, it looks like you're declining a claim for somebody who may be suffering from cancer or something like that, but actually we really do try and get to the best outcome, but sometimes you just can't get to that based on the answers that have been made. So financially, there's a big impact, but also in terms of the claims assessor and the claims team dealing with that, it's tough. It's a tough message to give.
It is, yeah. Paul, any further thoughts on that?
Yeah, there's obviously a cost attached to that, because typically what will happen is we'll need to request more GP evidence. That can cause further delays, and also when a misrep is identified at the claims stage, it usually requires more than one team to review it, whether that be claims and underwriting. So as well as the delays, it can lead to complaints. So it's not a great place for us to be. We'd far rather not have to kind of deal with it, because it just adds to that perception, that claims don't get paid when, as Tom says, that's not where we want to be. So yeah, that it does have an impact on us, yeah.
And it really does impact on that perception, because I think I'm right in saying around just over half of all declined claims are declined due to misrepresentation. So really significant. Justin, from a looking at it very commercially from an industry point of view, what's the cost to the industry of misrepresentation?
I think there's two costs. I mean, one is actually the actual financial cost, and you've seen a huge increase in the cost of claims teams. That was particularly true recently around income protection. We've seen a huge increase in income protection sales in the past couple of years. And through multiple different reasons we might get into a little bit later around that, you've seen a lot of claims coming in, either misrep or misunderstanding, which actually has driven a lot more people coming into that environment. So pretty from a financial perspective, I mean, it's been a cost to the industry. But I think much more importantly than that is actually your brand risk. Around at the end of the day, what we are about as a provider is paying claims. That's what we're here to do. If we don't pay claims, we cease to exist as an industry. And as soon as that perception comes across that we're trying not to pay claims, then you lose the trust of clients actually wanting to actually take out life insurance or health insurance or income protection, whatever the case may be. So for us, it's actually around creating that perception that we're actually there to help you get paid out, not actually to not get paid out. But this kind of increasing misrep is starting to create an environment where the perception of the industry is going, well, you guys, these big insurance companies, don't want to pay claims, is it worth my while? All those kind of things. So for me, I think there's a financial cost which actually is important, we need to actually contain. But I think much more importantly is actually the brand risk to the industry, which we need to get away from that kind of perception taking place.
Thank you. And presumably insurers and reinsurers, for that matter, are sat there with these books of business that are probably quite largely incorrectly priced for the risk that they truly represent. Because look, we find misrepresentation at claim and we deal with it. Paul, the guys in underwriting do the post-issue sampling, which does play a really important role, which goes some way maybe to identifying where some distribution firms could perhaps do better, and that can be addressed. But we're still left with these books of business which aren't priced correctly. So from looking at it from a purely commercial point of view, it's a massive cost to the industry from that perspective as well in terms of premium income.
Yeah, I think at the end of the day, certainly with the advent of sort of post-use sampling, I think that actually is going to solve a bit of that problem as well. I think what's interesting though, Phil, slightly off that particular question, is around what interests us is, there's two types of feedback post-issue sampling. One is around just simply putting a slightly higher premium, okay, or it might be actually saying you're uncovered for a certain element, okay, of the cover or decline. But what's quite interesting is most clients you go back to where you actually go and increase their premium slightly, okay, based on the feedback, okay, or put an exclusion, actually accept that exclusion and accept that. They don't cancel their contract. And I think that's a really important part of feedback through to advisors going, clients will accept it. Okay, I think there's a perception that you've got to give the clients the hunt around to find the company that's not going to load a premium and not going to do that and to find the best possible price. And that comes back to the point I said earlier, is the actual view get the client on risk at the best price, okay, or is the view actually make sure they're paying the right premium to get paid? And I'd argue it's the second part, and it's because, as we see coming through in the data, that people accept it. Once we go back to them, like I said, and say, here's actually an exclusion, here's actually a slight increase in price, they go, yeah, that's fine, okay, I agree. Which they would have done up front anyway, had that discussion actually been had. So I think coming back to what we said earlier, it's about the education and that feedback loop to actually go back to those advisors who had that misrep and saying, that client accepted it. Okay, don't worry about actually offering these things. The client will actually understand.
Can I just add to that, as also from an advisor perspective and from an experienced advisor perspective, and I was at providers for 10 years before I was an advisor, so I appreciate I'm not coming at it from the same angle as a lot of advisors, but going back to what you were saying, Justin, about the education, perhaps we need to do more education to advisors about how to explain adverse terms. So don't be afraid of having an exclusion. Don't be afraid of explaining. Actually, a really difficult exclusion to explain is the exclusion on TPD, because I don't think a lot of advisors really understand what TPD actually means or actually is. And once you explain it to a client, they read it, they hit the roof because they've got an exclusion, they're ranting and raving. And when you sit down with them and you explain it's an exclusion on TPD because of this, and this is what it means in reality, they're far more accepting of that. And then instantly the conversation's turned around to, oh yeah, that's absolutely fine, put it on risk. But by also explaining the fact that many of the providers now offer the value add services that are available to you even on this area that you've been excluded for. I'll use mental health as an example, probably one of the more common, I don't know from a misrepresentation, but certainly from an exclusion representation. But they can use these services, and when clients are managing their mental health, they know that they're very unlikely to claim on it. So it's that having that confidence to explain. And I'm wondering whether advisors are nervous about explaining an exclusion, so might manipulate the questions to avoid getting an exclusion. I don't know.
I would say they're definitely nervous at times about explaining it, for sure. We're very much big on just read it out, just give them the reasons why. Like you said there, this is the reasons why you've disclosed this, and because of that reason, these are the exclusions. But also mentioning the insurer's benefits, I think, is something that's really forgotten about. It's a great point.
Most customers have access to their NHS app now, so depending on how the whole advice process works, if they have access, if they've accessed it beforehand, if they can have it available during the application, then and I guess the question, there's questions that ask in the last 5 years, have you ever blah blah, and actually being, if it was 4.5 years ago, I mean, sometimes you're not quite sure, and if customers have that to hand, if they can be, if that can be flagged before the actual process, for example, that would, I think, really help in terms of getting accuracy.
If I can jump in, I think
sure.
That's the point is making slightly earlier that if you're going in to get a mortgage, you have to go into certain information, which actually is you have to actually have a lot of detail to actually get your mortgage. And I don't think we do the same thing in life insurance, in the sense of if you actually detailed up front to actually go and say, get your NHS records, just have them to hand, okay, on your phone, whatever it may be. I'm going to ask you these questions. and the person can answer honestly to those questions, that alleviates a lot of these issues. But I think it's because they don't come in prepared. Okay, as we said almost at the start of today's discussion, around setting the scene for the clients about what kind of questions are going to be asked. This is the information you do actually need. I'm going to phone you at this time to get that information from you, as opposed to, because one of the things is if every single client went for a GP report, the cost would go up. Okay, so you actually have to manage your costs at the same time, and that's sort of the point you're making, saying, well, you could do that, right? But then the cost of life insurance can increase because everyone's not going to get a GP report. And the reason why you're pushing STP rates, okay, to get them as high as possible, is to bring the cost of life insurance actually down. So those two things don't always equate to each other. So the short answer is yes, you can do that, but from a overarching perspective, you wouldn't want everyone doing it because of the cost. But if you can actually once again go back to education, the client's expecting these questions and is actually prepared for these questions, I think that would alleviate a lot of these things, because a lot of the disclosure isn't necessarily deliberate. It actually is they've forgotten, okay, or it actually was they thought it was a minor thing and didn't actually know it was a bigger thing. I think we sometimes go down the path of every client's trying to actually non-disclose. In my experience, that's not the case. There are certain clients, but it's more around just having access to the information, which I think is the most important thing.
I think that's an excellent point.
Yeah, I do as well.
That, misrepresentation, you hear that word and you automatically, other people might think somebody's lied, basically. But, we're in quite a luxurious position in the claims department where we see the whole process. We see policies sale all the way through to years later, potentially a claim being made. There are mitigating circumstances. Phil, you made a good point about, if somebody had, misunderstood their dates, they'd assumed it was over 5 years ago, certain symptoms and things like that. If it was 4.5 years ago, that's quite a reasonable mitigating circumstance here, and reinsurers would take a potentially more lenient risk based on what that misrepresentation is. So, we want to avoid the avoidable misrepresentation, basically. You do see deliberate misrepresentation, and unfortunately we obviously have to apply certain terms, retrospective terms, but yeah, it's the avoidable misrepresentation that we really want to focus on, and I think we can always do more to do that, definitely.
And maybe people don't know. There's a ABI code that the industry follows or should follow, which sets out how insurers have to deal with misrepresentation, and they have to classify the category of misrepresentation. If it's innocent, it's discarded, and the claim process continues. If it's deliberate, it quite often leads to the policy being cancelled. And if it's careless, then kind of retrospective terms are applied in line with a piece of legislation which dictates again how insurers have to act. And it's worth saying that the vast majority of misrepresentation falls into that middle careless category. Deliberate and innocent, there's cases that certainly fall into those categories, but the vast majority is careless. And on that basis, it can be avoided, right? So yeah. Tom, I can't talk about impact of misrepresentation on customers without going to a claims professional. You must have had many calls over your time having to break that news and discuss misrepresentation with customers?
Yeah, it's not a nice call. Like I said before, you're involved with that person. You know their story, you know their medical history and what they're going through, and to have that telephone conversation to say, look, this is what's happened. To be honest, in the more blatant of cases, it's an easier conversation because ultimately I think they already know what they've done and they know it's going to surface. But in other certain situations where they are expecting a payment and they're not going to be getting that, or they're having sort of a reduced sum assured being paid out, or whatever it might be, it's a tough conversation. Nobody wants to do it. And I do come back to the fact that no insurer or reinsurer wants to do that. It's not a good look. And we talk about reputational damage, but actually it's quite often unavoidable.
I think it's something to bear in mind that I think it's an easier conversation when you're having it with the individual who actually misrepped. Okay, it's a much harder conversation when that person's passed away and you're having a conversation with the spouse, of someone who's misrepped.
Absolutely.
And those, I really feel for our claims team. We have to have that conversation. That is not an easy conversation to have. And then to emphasize the points, the claims team does everything they can to make sure we pay a claim, not the other way around. It's not everything we can do to try and avoid paying a claim. It's everything we can do to try and pay a claim. But actually it's the conversations with the spouses, and the beneficiaries that are much harder than the conversation with the actual claimant, in those cases.
Yeah, I really couldn't agree more. And I've been in claims for 30 years, and I call them little scars, conversations that I can remember going back 10, 20 years and beyond with customers, where I've had to break the news of misrepresentation, discuss it with them. As you say, if it's a spouse, a child of somebody who's died, and we're not just talking necessarily about a medical condition. It could be drug use. It could be it's just the worst thing. And I don't know about you, Tom, but I have to build myself up to it. It does take a toll. I have to build myself up to it. You make the dreaded call, and it's almost like having an out-of-body experience, and you're there, discussing something hugely sensitive and that's going to impact that person's life. And again, I can think of recent examples where people have said, well, I will need to sell the house. I will need to move home. We won't be able to keep the home. And I've had tears, anger, and everything in between. It is really, really the most awful experience for everybody. It stays with you. It stays with you. And I think that's probably why I'm so passionate about this, because I've seen the impact firsthand, and I know how awful it is. Look, as an industry, I think we do a wonderful job. We pay the vast majority of claims, and we should never lose sight of that, and all the support and the help we give people. But when you sit there and you have to make those calls and deliver that news to people, you cannot hide from this topic, which is why I'm so passionate about trying to reduce it, as I'm sure we all are, trying to get better disclosure and reduce the number of claims that are declined due to misrepresentation.
Question, Phil, actually. You mentioned something, that it might not be a medical condition, it could be more recreational. And it feels as a society that there is more maybe recreational drug use going on, which certainly is not reflected in my questions set to clients. I've never had a client turn around to me and say they've taken recreational drugs, but they must be out there. So how do we get around that? Because there's a massive taboo about saying, well, yes, actually, I have done recreational drugs in the last 10 years or ever. I think there might be some question sets that still say, have you ever? And we're talking to people who they're going back 20, 25 years. But that's a fundamental potential non-disclosure, which is surely affecting society. So how do we get around that?
I'll answer that in a second. I think, firstly, you're absolutely right. Out of all the application questions, potentially it's one of the more sensitive. Nobody maybe in their university days or as a younger person, perhaps, they used recreational drugs, and it's a bit uncomfortable having to divulge that information. So I think if I would like to see advisors saying to applicants that, look, you can tell me in confidence, it goes on the application, it will go to the underwriting team. It's important you provide accurate disclosure to that question. But if you are uncomfortable about this or any other question, you can contact the insurer directly. You can send them an email. I'm sure insurers provide, the means of doing that, Paul. You can probably confirm that.
Yes, absolutely.
Yeah. And so even if they don't tell you, Charlotte, but they then choose to contact the insurers straight afterwards, directly, and I guess with advisors, a lot of advisors, know their customers, their clients, they become quite friendly with them. So again, making a disclosure about recreational drug use could be quite a difficult one. So I think it's important to let people know that, look, if there's anything that you don't want to tell me, it's still so important to disclose it, but this is how you can do that. You can contact the insurer, you can let them know about it. they will factor that in, but you need to do it.
Obviously I've been in the industry a long time, but I certainly, when I first joined the industry, we spent a lot of time actually understanding underwriting. And when I went out to go see clients back in the day, I haven't seen them for a long time, Phil, but when I saw clients back in the day, it was very much around, I actually understood underwriting. I could have a proper conversation with an underwriter around how underwriting actually worked. And I would question that today, that probably isn't the case. And so on. And once again, it comes down to the fact that it's just the professionalism in the industry. And if we do want to come across as a highly professional industry, the key component of that is underwriting, okay, and putting a client on risk. And it comes back down to, do we understand it? Do advisors understand it? Are we as a provider and industry doing enough to help advisors
I was going to ask
in those
about
conversations?
That big TI thing as well, because when I was at a provider I previously worked with offered that service, and they don't offer that service anymore. And when they did, there was evidence to suggest that they were getting better disclosures, because you're taking out that relationship. Cam, if you're seeing people every year, you know them on a personal level, you know what their cat's called, you know everything about their kids, you know what hobbies they do, and they're not necessarily going to disclose that because there's that personal relationship. Yeah. But I'm wondering, could the industry go back to offering those big TIs? Because once the client's talking to the provider, their mind does shift from friendly advisor chit-chat to, this is serious, this is my life insurance application.
I think we're probably speaking further in advance than maybe this conversation deserves, but I think what providers are looking at is much more around getting access to your NHS reports, all right, which actually being much more streamlined in the sense of, going forward, if you once again thinking 2, 3, 4 years down the line, you'll just give us permission to get your NHS reports, okay, and then online it'll happen.
So guys, we've talked about why is misrepresentation increasing across the industry. We've spoken about the impact, and I guess we've spoken about what we can do about it to some extent. But to kind of bring the discussion towards the end, any other thoughts about what, as an industry, whether we're on the distribution side or the insurance/reinsurance side, how can we drive this problem? Look, I guess we're never going to get rid of it fully, right? I mean, let's be realistic. So what realistically can we achieve as an industry over the next 2 years, for example? If we all kind of put our cards in and said, right, look, come on, let's work collaboratively. Let's try and tackle this problem. Let's try and get better disclosure, more accurately priced books of business, pay more claims. What does that look like? What can we do?
I think there's a running theme in this conversation, and that's education. I think we have to accept, like you said, there will always be misrepresentation. We've done a very good job in the industry of simplifying the processes and the application process. But we have to accept that misrepresentation isn't fully going to go away. We have to just try and reduce it. My view is that we can probably do more to educate about repercussions of misrepresentation. I know in application forms we have maybe a sentence or two to say, you need to be honest, otherwise this might happen. But I think we should try and emphasise that a little bit more, maybe with case studies, explain that, in the most drastic of circumstances, you might not be covered, or you might not be covered for the condition you're claiming for. And reassure people about, if you make a disclosure, that doesn't mean you're not covered. You could still be covered. It's all about, that application form is all about tailoring a policy to your needs and history. And you don't want to put that in jeopardy, basically. So my view is repercussions of misrepresentation at outset, rather than us having to do that in the claims team on a retrospective basis.
So education, and that's education for customers?
Yeah, we've spoken a lot about education for advisors, and I think advisors do an amazing job, a difficult job, and they try and get as much information as possible. My view on that is still the onus is on the actual applicant to provide honest answers. You guys can only do so much when asking the questions. So I think that education needs to go to the main source, the applicant themselves. If they don't disclose accurately, there could be quite a drastic implication. Insurers will try and avoid that where possible, but that's not always going to be the case.
And while I've got you, Tom, what about education for claims teams? Do you think claims teams sometimes a little bit overzealous maybe in terms of going after misrepresentation?
I would say 20 years ago that might have been the case, but now, the industry is very regulated, it's heavily regulated. You couldn't do that anymore. We wouldn't want to send or have a case go to the Financial Ombudsman Service where it looks like we're fishing for information or we're being unreasonable. It does come back to the fact that we want to pay claims.
Thank you. Anyone else?
So maybe just to echo that point slightly, because that is the key theme. But I think this education, I would agree with points and advices. When we look at the misrep, in most cases, it actually is the client. It actually is very rarely the advisor trying to get the case on risk. Maybe they haven't asked the questions exactly the way they should have, but actually at the end of the day, you can listen to a lot of calls these days, okay, and it actually is the client. I think there's a lack of understanding about the implications, and I really like the point you made earlier around clients actually being aware we're actually going to check on this. And if a client's actually made aware that we actually are going to check to make sure what you said is actually true, it does unlock that view of, I better actually disclose this stuff. And actually educate them, saying if we do find this out, that does mean that down the line you may not be around, and we actually can't pay your spouse, okay, or your children. And just making sure clients actually fully understand that component. And I think once they do, and they understand they can't really get away with it, that suddenly changes their mindset a lot. Okay, to be saying, well, I better disclose this because it's not worth my while actually not disclosing it. And so I think if you add those two things together, more help for advisors about this sort of empathetic questioning and actually unlocking the information, but importantly for clients to actually understand the implications of not doing that. So I think if we can do those two things, I think it certainly would help over the next 2 years, absolutely.
Dan, Cameron and Charlotte, so from a distribution point of view, do you, when you're with customers, do you replay, to what extent do you talk about the repercussions, and do you have case studies that you use? And I guess, can that be off-putting to a customer if they hear that? And does that make them think twice about taking out protection? So does that actually make your job more difficult?
I don't think so.
No, okay.
I always talk about the repercussions at the beginning, but as I said earlier, it just increases the seriousness of the discussion you're actually having with the client. And it does take away the laughing, joking relationship sort of side to say, actually, right, we've done that, but actually this is a serious part of our conversation now. But we have to do something which is really important and could have a serious financial impact on you and your family in the future. So I don't think it harms the process whatsoever. I think it makes people feel more comfortable with the officiality of it, rather than it seeming like a bit of a, for me, we've done your investments or whatever, but protection is the side piece, or mortgage and protection is the side piece. That's not the case. This is as serious as anything else that we will do in your world. But I do think there is, I suppose, an opportunity for networks. They're bringing on new advisors to offer more educational pieces. Because had I not worked in an insurance provider before becoming an advisor, would I have known about misrepresentation or the potential implications of that? Definitely not. And it's not something flashy that a BDM will pull out in a presentation to sell you on a provider. It's those are optional webinars that you don't join because it's not really going to aid your process whatsoever. So having that as part of an essential part of advisor training before sign off, I think, would make a massive difference.
I absolutely agree. I think advisors get nervous when they have a case pulled for a post-issue sample, but they shouldn't, because it's just validating that job has been done, the disclosure is accurate, and the claim will be paid. It's the best feeling when you get a report back from a post-issue sample to say there's been no change in your client's underwriting. You're like, amazing, because that means that I've done my job properly to extract full disclosure. But if a client is unaware that their application may be pulled for a post-issue sample, they may feel that they could gloss over some of the facts. So if an advisor is more confident in the whole process and the implications of the whole process, and it goes all the way back to the beginning of the conversation, Justin, when you said advisor education.
Okay, well, thank you, everybody. Before we go, we're going to do a quick fire final reflections round. It feels like a bit like a quiz show, doesn't it? So could we go around the table? We'll start, Dan, with you. What is the single most important change that would reduce misrepresentation in protection?
So from an advice perspective, we need to signpost better, help the client out, basically. with understanding, like a few of us have said today, the repercussions. Don't be afraid to share case studies, help them through it, but also make good detailed notes as well, so that if anything is missed on application stage, have the confidence to go back and say, you might want to mention this as well.
Thank you very much. Cameron?
I would say educating new advisors, I think, is key. Implementing misrepresentation into training processes, into the onboarding of new advisors.
Thank you, Justin.
I would agree with that. So I think it's actually understanding of the implications of the whole underwriting process, and understanding that that's actually a key component of the sales journey. It's not just a necessary evil.
Thank you. Charlotte?
Without repeating, so I think encouraging clients to have access to their NHS records, their medical records, the dates that they would be needing as part of the application, and advise that post-issue sampling is a very real thing which could be them, which could impact their application.
Thank you, Paul.
So for me, I think just ensuring that the customer has sufficient time at the application stage to consider the questions and options, and really reinforce that message that they should review their application summary. It's a really important part of the process.
Thank you. And finally,
Yeah, for
Tom.
me, it's going to be education again. People need to be aware of repercussions of misrepresentation, the repercussions to them themselves. And really the final message really is, if you just make that little effort at the policy application stage, could save you a lot of maybe frustration at claim stage.
And I don't know if I'm allowed one, but I'm going to have one anyway because I'm a bit cheeky. So I think for me, and I think it, it's similar to what you've all said, but I think that there's some little things that make a big difference that can quite easily be built into the advice journey without disrupting it massively, or And I would urge just everybody to really think about those, As I say, go to the hints and tips on the IPTF website. Have a think about those little things that can make a difference, and look at how you can make the process better for insurers. I've talked about customer apathy to checking the application summaries. How can insurers actually try and get better take up of checking answers and making sure they're correct? We can choose not to tackle the problem, but I think we need to have that conversation in terms of seeing what we can do. So thank you all very much for your time today. It's been great seeing you all, and I'm sure that we could carry on talking for a lot longer. I'd like to draw your attention to the IPTF website, the 7 Claim Stories project that I've been leading. Lots of great information on there and covering misrepresentation, but also look out for the next IPTF Industry Conversations. This is number 1. It's a ongoing series, so there'll be another out soon. Once again, thank you everybody for participating today and being here. It's been great seeing you all, and it's been a really interesting discussion. To everybody watching, thank you for doing so. Hopefully you've taken a lot out of it. So thank you very much. Thank you.